Okay. We started out with just some basics of what goes on in the tax law area. Congress passes laws which become part of the Internal Revenue Code. The Internal Revenue Service writes regulations that are interpreting that law. Then the court issues rulings that clarify the law and the regulations. The Internal Revenue Service can also issue private letter rulings. We cannot use those as precedent, i.e., if somebody says, here's my situation, can I do this, or should I do this, or is it allowable to do something, and the Internal Revenue Service gives them an answer, we can't say, well, I've got the same exact situation, so I can rely on that answer. You cannot. If they audited you, you couldn't say, well, here's what you told so-and-so. Private letter rulings are strictly for the person they were issued to. It's protection for them from an audit or situation where the IRS disagrees later. Then they pull out that ruling and says, here's what you told me I could do. This page down, not working. There. We talked about who is a minister, and according to the tax law, someone who is duly ordained, commissioned, or licensed and is engaged in the ministration of sacerdotal functions, the conduct of religious worship, or the controlled conduct and maintenance of a religious organization under the authority of a religious body constituting a church or a church denomination. The courts have added another point, an extra point, that you're considered to be a religious leader by your church or parent denomination. Like I say, it's just something the courts have used as a determining factor. We talked about sacerdotal functions being officiating at weddings, funerals, houses of mournings, administered ordinances of baptism and Holy Communion, preside at marriage and funeral ceremonies. The court has come up with 5 points as opposed to the 4 points that the IRS or regulations have. You administer the sacraments, you conduct religious or worship services, control, conduct, or maintain a religious organization. You are ordained, commissioned, or licensed, and that one is required, and you are considered to be a spiritual leader. So we said the item 4, ordained, commissioned, or licensed is required, and the preponderance of evidence for the other 4 items determines if one qualifies as a minister. If the Internal Revenue Code and the courts both hold that being ordained and commissioned or licensed is a requirement, what about those of us in the church where there is nothing, no ordaining, commissioning, or licensing body? Then that situation, according to the courts, right here, duly ordained, commissioned, or licensed did not depend upon the timing or the fact of ordination, but instead depending upon when the person assumed the duties and functions as a minister. That was a 1993 case with Reeder in the tax court. So a later 1984 case, and earlier actually, Ballinger 1984 case in the 10th Circuit said, the court said, we understand that not all churches or religions have a formally ordained ministry. Could be because of the nature of the beliefs or the lack of a denominational structure or any of other reasons. We interpret Congress's language providing exemption for any individual who's ordained, commissioned, or licensed to mean that the triggering event is the assumption of the duties and functions of a minister. And then we went through 8 examples of things that a minister would do. For example, number 5, teaching at theological seminaries. Service as a qualified minister as an employee of the United States other than as a chaplain in the armed forces. Just 8 different examples that they have in the Treasury regulations about things that ministers do that qualify them as a minister. We talked also about an author, someone who's writing religious books, religious periodicals, can be deemed to be a minister. A chaplain, as long as they're not in the armed forces, a church administrator, a parachurch minister. If you remember the parachurch word, that's a a non-church, and we talked about some examples. My mind's gone blank on me. In Search of the Lord's Way, that's what I was trying to think of with Phil Sanders. If Phil were not under the control of an eldership, but that service, that radio ministry, GBN would be another one. If it's not under an eldership oversight, those would be considered to be parachurch type situations. So then we looked at some court cases where the ministers spent, counselors, the ministers spent 50 to 75% of their time in counseling, and they were not deemed to be ministers. And that's the first set of items we looked at. Let me open up the self-employed or employee, and we'll run through that. The IRS stance is that ministers are always, let me get the screen share again. The IRS stance is that ministers are always employees for income tax purposes, but self-employed for Social Security purposes. And we looked at a sample W-2. The housing allowance piece goes in box 14. The salaries, wages, etc. goes in box 1. Nothing else on here unless the church has voluntarily agreed to withhold income taxes. Then you may have a number in box 2 and a number in box 17. But other than that, nothing else. The church does not pay Social Security tax on what they pay the minister like they would a secretary. He's not treated as an employee for Social Security purposes. He's treated as an employee for salaries and wages purposes. And we talked about some of the differences it makes, benefits being tax-free versus taxable income, having to deduct expenses on Schedule A, which brings up an interesting point in the new tax law, which takes effect in 2018. As a general rule, Congress did away with unreimbursed itemized business expense on Schedule A. Now, I'll have to learn more about exactly what the new law says, but unreimbursed expenses may not be deductible anymore on Schedule A in 2018 and beyond. So that's something I need to do a little more research on. Another major issue there is liability for misconduct. If you're deemed to be a self-employed individual, who's responsible for any misconduct? You are, as opposed to the church having some responsibility there. The court we talked about has a 3-factor test and a 20-factor test, or the IRS has 3-factor and 20-factor tests. The tax court has a 7-factor test. The Supreme Court has a 12-factor test. The income tax regulations include a corporate officer test. And we looked at the 3 factors that are part of the 3-factor test: behavioral control, financial control, and the type of the relationship. And then we looked at the 20 questions on the 20-factor test and went through those fairly quickly. And I think we all agreed that the vast majority of these you would come out as being an employee as opposed to being self-employed. But then at the end of that, we did look at some court cases, and the ones that were self-employed came out self-employed. We looked at in detail, but the vast majority of the rulings are right along the lines of what the IRS always deems you to be: an employee for income tax purposes, self-employed for self-employment tax purposes. The Alford case we talked about, his status as self-employed was determined by the lack of control of the local church over his activities. He supplied his own furniture and the equipment he used. He set his own schedule. A similar situation in Shelley. He was hired for his specialized skills and style. He was chair of the church board with authority to appoint members of the board. He was not supervised or evaluated. He paid for his own continuing education. He used his own library. So in that case, they deemed him to be self-employed. And finally, the Green court case from 1996, he decided where he was going to be a foreign missionary, raised his own support, hired and paid others to assist and support raising for him. He decided where he would go, what he would do, when he would leave, what services he would offer through his ministry, etc. And in that case, the court once again deemed him to be self-employed as opposed to an employee. There are situations where most ministers are going to be self-employed. If you do a summer series, or you speak at PTP, or you hold a gospel meeting, if you provide services directly to members like weddings or funerals or whatever, you're going to be deemed to be self-employed in those situations. And then itinerant evangelists probably going to be deemed to be self-employed as well. So we talked briefly about the Revenue Act of 78, Section 530, providing a safe harbor. If the church has been paying you on a 1099, but wants to stop and start paying you on a W-2, there's no reason they shouldn't if that's the case, because there's no penalty. They shouldn't have withheld any payroll taxes or anything. So, you know, that's something that if you're involved in a situation like that and they want somebody to talk to, I'd be glad to talk with you about that situation. All right, and that was our second class, talking about employee or self-employed. Let's cover the third class on electing out of Social Security and Medicare. Six requirements to exempt out of Self-Employed Contributions Act. You have to be an ordained, commissioned, or licensed minister by a tax-exempt church or convention or association of churches. You have to file a timely election on Form 4361. You have to notify the ordaining, commissioning, or licensing body. You have to receive approval of Form 4361 from the IRS. You have to not have made a disqualifying election. We'll first look at what's on the 4361 election form, and it says you're conscientiously opposed to accepting any public insurance that makes payments in the event of death, disability, old age, or retirement, or that makes payments toward the cost of or provides services for medical care, i.e. Medicare. And you certify that you're conscientiously opposed in the second paragraph to any public insurance that makes those payments. Social Security would be the retirement old age piece, and Medicare would be the medical care piece. You certify you've never filed Form 2031. That would be the disqualifying election, and there were various times we looked at that you could have filed those. And because you certify that you're conscientiously opposed to that, and you're duly ordained, commissioned, or licensed, and have never filed Form 2031, then you request to be exempt from filing or paying Social Security and Medicare. The due date we talked about being the tax return due date of the second year in which you earn more than $400 in self-employment income, off which any portion is from ministerial services. So the first year you do it does not have to be the prior year. It could be 1 year you did it and then you took a break from ministerial services or didn't make more than $400. But that second year in which you make some at least $400 in self-employment income, of which some portion is from ministerial services, is the due date for that election. Let's see, that's what we talked about. The disqualifying events, there were 3 occasions: 1977, 1987, and 2000 or 2001 returns. and you could have filed a 2031 prior to 1968 to elect to be in the Social Security system. So those are the disqualifying events that would have kept you from doing that. And then we just talked about a couple of references here. Dane Wade wrote a January 2009 Gospel Advocate article where he said a minister, his opinion was a minister should not elect out. Wayne Jackson, in an article on Christian Courier, says a minister has that right and can in good conscience do so. And then we talked about if you've done it and can't prove your election, you can go to the IRS or Social Security Administration, either one, and try to get proof, or you can look at a transcript of your account, etc., etc. And those were our December classes. Our January class, we started talking about what constitutes income for a minister. Obviously, salary would constitute income, any retirement gifts, and we talked about some special issues with retirement gifts, special occasion gifts, and we looked at that gifting idea, and we'll look at that in just a minute. If the church sells you something for less than fair market value, then any difference in what you paid for it in the fair market value is income to you. Any reimbursements paid to you that are not paid under an accountable plan, and we'll talk about accountable plans a little later on this quarter. Any bonuses, if the church pays their share of Social Security and you're subject to Social Security, that's additional income to you. Personal use of a church-owned vehicle is income to you. Any forgiven debts, if your spouse travels with you and the church pays for her travel cost, something that's above and beyond your cost to travel, like airfare, a second seat for her, and she has no business reason to be there with you, just benefiting you from an emotional standpoint, then any costs there that they incur on her behalf would be income to you. Health insurance premiums. We talked about the W-2, the employee. The church can pay health insurance premiums, and they are not income to the minister. Whereas if you're a 1099 person, health insurance premiums paid by the church would be additional income to you. And then below market rate loans. We're going to talk later about some of these tax-free fringe benefits starting next week, maybe even. Gift. A gift is in the intent of the donor. What is the transferor's intent? What controls the intention with which payment, however voluntarily, has been made? A gift proceeds from detached, disinterested generosity out of affection, respect, admiration, charity, or like impulses. So gifts, depending on what the donor intends, and we talked about the example of you're back in the back shaking hands as people are exiting the services, and somebody sticks something in your hand, and if they tell you, I just don't think they pay you enough, their intent may very well be that you have additional income. If they say, I want you and your wife to just go out and enjoy a good meal on me, that may be that disinterested, detached, disinterested generosity, affection, respect, admiration, charity, and like impulses. So in that situation, I would argue that it's just a gift and you don't owe tax on that. We talked about a couple of court cases from 1991, 1995 for Banks and Godwin, where there was a lot of planning going into the gifting being done. There was regularity with which the gifts were done. They were selected special occasions, and they constituted a lot of what the income was to the minister. And in both those court cases, the ministers were deemed to be receiving additional income not gifts. We did discuss where we had some court cases from the late 40s and early 50s, early to mid 50s, where there were some retirement gifts to ministers, inclusive of recurring monthly payments that could be tax-exempt gifts. And under Section 102C of the Internal Revenue Code, in any amount transferred by or for an employee to or for the benefit of an employer to or for the benefit of an employee cannot be a gift, with the exception of employee achievement awards or de minimis fringe benefits. And we talked about employee achievement awards can only be cash or cash equivalent, can exceed $1,600 in value, can only be awarded every 5 years, and must be for length of service or safety achievement. And I gave you the illustration of my watch that I've had now for probably 20 years or longer, which was rewarded to me by Bell South for having spent an additional 5 years working for them. You know, it's one of those employee achievement awards. So as long as it obviously was not cash or cash equivalent and did not exceed $1,600 in value, it was not taxable income to me. So we talked then about, you know, if the church gave you a gift certificate to the bookstore and said, go buy you a set of commentaries, the problem with that is it's cash or cash equivalent. Whereas if they said, order you a set of commentaries and we're going to pay for it, that's a gift, as long as it's for a service or safety achievement. They can do something like that. We talked about earlier, you know, if the church pays half of the self-employment tax, the Social Security equivalent tax, then that is additional income to the minister. Housing allowance does get added back. So on the W-2 that we looked at earlier, for Social Security or self-employment tax purposes, you would add the housing allowance back to the salary amount in box 1, and that's what your self-employment tax would be based on. Let's see. Oh, yes, we talked about if you go somewhere and hold a meeting and they say, here, we'd like to pay you for holding our meeting, but, you know, you realize, you know, that they're a struggling congregation, and you say, no, just forgive it. Just don't pay me anything. I'll just do it out of the goodness of my heart. You, in essence, have income and a corresponding charitable contribution. My recommendation would be that you go ahead and take their check, and then when you get home, deposit their check and turn around and write them a comparable check and send it back to them. And then you've got documentation of what really happened. You had income, you've got a charitable contribution. Yeah, we talked about you shouldn't be contributing by just reducing your salary. We talked about unreasonable compensation and annulment, and the PTL bankruptcy case, where the IRS went after Jim Baker for all the extra compensation that he was earning, and all those things, and then the variety of tax cases where the church had problems, et cetera, et cetera. All right. One more class that we're going to review before we do the exam. All right, housing allowance. We said that housing allowance is contained in Section 107 of the Internal Revenue Code. In 1971, the IRS imposed an additional requirement that housing allowance not exceed fair rental value of the furnished house plus utilities. The Warren case, where the courts held that that was just the IRS adding to the law, They came in. That case was tried in 2000, 2001, I think the finding was. So the Congress came in 2002 and added the Clergy Housing Allowance Clarification Act to enact in the Internal Revenue Code itself, the law itself, that was another restriction on how much housing allowance you could take. And here's Warren versus Commissioner in 2000. The court threw out their regulations regarding the fair rental value, and instead a 3-judge panel of the Ninth Circuit Court of Appeals raised issues regarding the constitutionality of the housing allowance. We discussed what the Freedom from Religion Foundation is doing and the current status of their lawsuit against the IRS against allowing a housing allowance to ministers, and that issue is still up in the air. Unless a lower court throws it out, it very well may make it at some point to the Supreme Court to be decided. We talked about the expenses that can be covered by housing allowance: monthly rent, mortgage principal and interest payments. And if you're paying mortgage interest, that is a deductible item on Schedule A. You don't adjust that deduction by whatever you got reimbursed for housing allowance. It's just a double dip, and the IRS realizes it's a double dip. It's just the way the law is enacted and written. All your utilities, electric, gas, water, sewer, trash, cable TV, telephone, firewood. Now, telephone does not include cell phone, but it would be telephone, a landline into the house. Anything else there that was utility type. Other pest control, household cleaning supplies, maintenance, lawn service. Some of the annual items you deal with, a homeowner's insurance, real estate taxes, and those items are also, once again, deductible in full on Schedule A as itemized deductions. But if you've got, especially in the new tax law that's taking effect in 2018, where they're raising the standard deduction amount, a lot fewer people will be itemizing deductions. So you get the deduction here. It may be that you don't need the deduction on Schedule A. So it may just be, that we'll just have to wait and see how all that works out. Insurance on your furnishings and umbrella liability insurance, any homeowner association or condo association dues or fees, other items, down payment, real estate commissions, attorney fees, escrow fees, points, origination fees related to the purchase of a new home, furniture, furnishings, appliances, plates, utensils, cookware, cups, carpet, curtains, drapes, linens, pictures, wallpaper, paint, keys, replacing locks, repairs, maintenance, improvements, landscaping, fencing, special assessments. All those things you can add up and cover by housing allowance. Now, I think, Justin, you asked, what about moving expense and moving cost? And I can find nothing that says yay or nay. I've looked in the law. I've looked in, there is a potential to take a moving expense deduction as long as your new job is more than 50 miles from where you used to live. Then you can take a moving expense deduction, but I don't see anywhere where that has been tested in court, nor do I see anywhere where the IRS has ruled on whether or not that would be an allowable expense for housing allowance. Some rules about the housing allowance: you must have an agreement in writing prior to any monies being designated. Let me back up. You must have an agreement prior to any monies being designated, and it's preferable that the agreement be in writing. That way, if the IRS ever audits you, you have something written that says, and preferably the writing be dated. So the writing would be the preferred thing, because there have been court cases where basically the minister was relying upon whether or not the jury would believe him as far as granting him housing allowance and the deduction of those monies as housing allowance. So it's preferred that the agreement be in writing. The agreement cannot exceed reasonable compensation for the minister. The deduction cannot exceed fair rental value of the furnished home plus utilities. And the amount of the allowance can be adjusted by mutual agreement of the parties. So if you, during the middle of a year, decided you were going to buy a different house or rent a different place and the cost is going up, you can prospectively adjust your housing allowance amount to cover that additional amount. And that can happen for the balance of the year. Now, it's not something that you can, oh, I forgot to put, to get it at the beginning, and let's go in and you know, try to make it up through the balance of the year. You shouldn't try to do that. But it can be adjusted by the mutual agreement of the parties. IRS guidelines, audit guidelines, states that housing allowance exclusion only applies if the employing church designates the amount of the parsonage allowance in advance of the tax year. That's not what the law says. So if you ever get audited on that, expect them to look for that happening prior to the calendar year in which you're taking it. If it did not happen, if it happened early in the next year, you're fine. You're meeting the laws and the regulations. They just have improper guidance in their audit guidelines. Kaiser versus Commissioner, a 1992 case. He was allowed a tax-free housing allowance even though the designation was done orally with a written record of the event much later. Logie versus Commissioner was not allowed a housing allowance because there was no evidence the designation had happened and the minister couldn't prove it. That's where I said that he was basically relying on the judge and the jury to believe him, and in that case they didn't. Holmes versus Commissioner, a tax court summary opinion in 2010. Salary was $13,500, of which $13,000 was designated as housing allowance. He was audited, but nothing was brought up about the percentage of his salary, which was designated as housing allowance. The audit was revolving around how much he spent on the housing. And the tax court in this case held for the minister. So he was paying income tax on only $500 of his ministerial. And I think, Brian, you were talking about, you know, your housing allowance can be for 100% because your expenses exceed, or allowable expenses exceed your income from ministerial because you're working part-time. So that's entirely possible. Now, the only issue may be if they issue you a W-2 and there's nothing in box 1, what will the IRS say with nothing in box 1? They may not even want the W-2 issued. Heritage Village Church and Missionary Fellowship, minister not allowed a housing allowance since the church paid all his housing expenses and the utilities for his house. Therefore, any housing allowance designated exceeded reasonable compensation for the minister. Better to overestimate your housing cost and the amount of your housing allowance in order to maximize the reduction in taxable income. And we said there are $3 amounts that play into that housing allowance. And you're allowed to take the lesser of these 3 as the appropriate exclusion from income for housing allowance. Those 3 amounts are the amount of the housing allowance, the fair rental value of the house plus the utilities, and actual expenses. So the least of those three amounts would be what would go as reduction on your income tax return. And in the example we talked about, where the W-2 showed a $47,500 salary amount and a $22,500 housing allowance, if the guy only spent $21,500 in actual expense, his housing allowance was $22,500. The fair rental value of the house was $22,500, but he spent $21,500. That extra $1,000 that he didn't use of his housing allowance on actual expenses would be added back to his income. Let's see here. We also talked about a retired minister can designate some monies coming out of a retirement account as housing allowance, but the spouse of a deceased minister is not allowed to designate a portion of retirement income as housing allowance. Okay. A retired minister who is not exempt from Self-Employed Contributions Act, i.e. didn't exempt out of Social Security or Medicare, if he gets housing allowance still paid to him, would not pay self-employment taxes on the housing allowance. So all he would potentially pay would be income on the amount of income beyond the housing allowance. So he wouldn't be subject to self-employment tax on the amount of the housing allowance. An active minister, not a retired one, an active minister has to add it back to his ministerial income to get for his self-employment calculation. All right, and that's what we did. Any questions on what we reviewed?
No, sir.
All right. Ryan, do you want to take the exam?
Sure.
You don't have to.
Sure.
I'm going to go ahead and stop the recording, and then I'm going to email y'all the exam.